I've been an order flow trader since I began my professional trading career back in 2003. In this video, I'm going to explain exactly what order flow trading is. We'll discuss the tools and indicators order flow traders use, what software you can use to trade order flow, and at the end, I'm going to share where you can get professional order flow training. The best part, it's free, all of it, literally, everything you're going to need. Let's get into it. Order flow trading is a style of trading where edges are defined through the analysis of advertised orders and or executed orders. Order flow traders look to profit by capitalizing on market imbalances, which will make more sense shortly. This is my own definition for order flow trading. It's become a buzzword online by all of the trading gurus, yet nobody seems to understand or define what it truly is. There's two different forms of analysis when it comes to order flow trading. On one end, we have the analysis of executed orders, and on the other end, the analysis of advertised orders. Executed orders are trades that actually took place between a buyer and a seller, whereas advertised, also called resting orders, are the resting bids and offers from buyers and sellers. We use different tools and indicators to analyze the two different types of data, which we will look at shortly. As technology has advanced over the years, so have the tools we use to analyze order flow. Let's take a brief look at the history of order flow trading, as I think it will help drive home what order flow really is. Order flow trading began in the trading pits of the exchanges. Pit traders would use hand signals in their voice, thus the name open outcry, to relay their orders to market makers. I can still remember the day that I first stepped foot on the floor of the Chicago Board of Trade in 2002. I was a junior in college, and the experience for me was absolutely electrifying, and ultimately would set me on a path for the rest of my professional career. In order to be a successful trader in the pits, you had to be an expert at reading the crowd and the moves of the large players, all while keeping your cool and managing your emotions in a very chaotic environment. Pit traders were literally in the heart of order flow. The pulse of the crowd would drive the decision of locals to buy or sell. As trading began to go electronic, more and more volume left the floor of the exchanges. The advancement of algorithms were pretty much the final nail in the coffin for floor traders as volume dried up. Along with the new technology came an advancement in the tools that we use to analyze trade data. One of the first major leaps was the introduction of level 2 quotes. Level 2 quotes had been around for decades, but access to them wasn't simply a matter of going to a website and paying for data. Level 2 quotes display all the bids and offers for each price level from every ECN, which stands for Electronic Communication Network. I began my trading career as a level 2 trader. The level 2 became the heart of order flow trading, similar to the traders in the pits signaling their bids and offers to the market maker. It brought market demand and supply to life. When I first began trading, that was enough of an edge on its own to make a lot of money. However, like all competitive industries, technology leads to rapid advancement in the tools that we use. In 2008, trading algorithms tipped the scales and began accounting for a majority of the daily trading volume. This made it much more difficult to read a level 2 as orders were constantly pulled and added to the book. Relying on a level 2 solely as your edge was becoming nearly impossible. Similar to the floor traders, I had hit a point where I had to adapt and develop new edges or I would be looking for a new job. At that point in my career, I began to study volume analysis in great depth, which has ultimately led to the strategies that I built and trade today. Just like any other competitive industry, advancement is rapid. If you want to make it long term in this business, you always have to be looking for ways to improve your edge. Auction market theory is a core philosophy behind order flow trading. Auction market theory is a philosophy that financial markets move higher and lower due to imbalances between buyer and seller aggression caused by market events until price discovers a level where aggression is balanced and the most trade can be facilitated, which we call fair value. Once you begin to incorporate AMT into your core principles and strategies, you will begin to feel more empowered as a trader. I believe you become better at reacting to market data and events rather than trying to predict them in the traditional technical sense. The ultimate goal of any order flow strategy is to determine if the market is balanced to profit off of ranges or imbalanced to profit off of trends. Again, this is done by focusing on the data generated from executed orders and or advertised orders. Let's take a look at some of the tools and indicators used to analyze the separate data types. We'll start with advertised orders. First, we have a level 2 or depth of market, also called a dome. We use a dome to analyze areas of high and low liquidity in the book and to evaluate the aggression of buyers and sellers. This is what you would call reading the tape. There's no shortcut to mastering reading the tape. It takes experience, which as a trader means extensive screen time. In time, you'll begin to notice how price moves through different levels of liquidity. Every instrument you trade will have different characteristics. For example, a high flying meme stock or volatile stock like Tesla will have different characteristics than a company like Microsoft. Next, we have time and sales, which lists every trade by its transaction time, volume, and price. We use it to spot large orders and gauge the speed and flow of the market. Similar to a level 2 or a dome, it will take experience to learn how to read time and sales, and every instrument will have its own unique characteristics. Third, we have liquidity charts, which display the advertised orders in a visual manner. This liquidity chart comes from Bookmap's charting software, which specializes in liquidity charts. The goal of these charts is to help you interpret areas of high liquidity, which will act as a resistance, and low liquidity, where price is likely to move through quickly. We will discuss a number of platforms that have similar features shortly. Let's take a look at some of the indicators we use to interpret executed orders. First on the list, we have volume and volume profiles. Both indicators have been at the core of all of my strategies for the past decade. I use volume and volume profiles to determine if a market is balanced or imbalanced, the strength of a trend, and to find potential high probability reversal points. If you're new to order flow, this is where I would focus your efforts to start. Next, we have market profiles. In the words of James Dalton, the market profile is a unique charting tool that enables traders to observe the two-way auction process that drives all market movement, the ebb and flow of price over time in a way that reveals patterns in herd behavior. I personally choose to use volume profiles solely, yet we have some team members who are very successful that prefer market profiles. I'd recommend you spend some time learning both of them. Third on the list is volume delta. Volume delta measures the difference between buying and selling pressure. It's calculated by taking the difference of the volume that traded at the offer price and the volume that traded at the bid price. Cumulative volume delta simply plots the delta values for each interval on a graph. Delta allows you to gauge the strength of a move by analyzing the aggression of buyers and sellers by their use of market orders. Delta is a critical tool I use as a scalper, but I believe it can be beneficial even to long-term traders. Next, let's take a look at some charting options that you should check out if you're interested in order flow. There's 4 options I would recommend you check out, and they all have demo products, so make sure to test all of them. There's a link in the description of this video to all of their websites. MotiveWave is a platform that I've used for the past few years. It's a great piece of software and I highly recommend them. Second, we have Sierra Charts. I used Sierra for almost a decade in my career. It's super lightweight and fast and robust, as long as you don't mind their graphical user interface, which is getting a little bit dated. Third is Quantower. Personally, I have only demoed their product, yet I know a few traders who really like the software. And then finally, as mentioned earlier, we have Bookmap. Once again, they all have demos, so make sure to take the time to check them all out. If you remember at the beginning of the video, I said I would share with you where you can get free order flow training. Starting on September 22nd of this year, 2023, I'm going to start working on and publishing a comprehensive order flow course for YouTube. 100% free, no gimmicks, no sales pitches. I'm literally going to do a brain dump of the last 20 years of my life. If you're on board, help me out. Give this video a thumbs up and subscribe to the channel. In doing so, I promise to produce training that I'm completely confident will help you on your journey to becoming a successful day trader. I hope you enjoyed this video and are excited for the training. We'll see you in the next video. Take care.